Hey, welcome to the Reverse Mortgage Podcast. I'm your host, Bill Gross, at Bill Gross Probate on social media. And we get together with a new episode every week. Most commonly, it's almost always interview with top producing originators, most commonly, or managers of mortgage origination companies. But today I'm really excited to have somebody who's an expert in the innovation and the process of mortgage origination, George Morales of Mortgage Cadence, located in Long Beach, sunny Southern California. George, thank you so much for making time for us today.
Yeah, Bill, I'm so glad to be able to finally connect with you. So thanks for having me.
Of course. And so Mortgage Cadence is about innovating the way companies originate reverse mortgages. Talk a little bit about what Mortgage Cadence does and how it's different than some of the other methods that companies have used in the past.
Yeah, right now, if you work at a lender, if you're an originator and you work at a lender, you log onto your computer or on your cell phone in some cases, and you can start working on your loan files in there, right? That system that you're working in is the LOS, which is loan origination system or software. And Mortgage Cadence is an LOS. We have an LOS that's being used by forward mortgage lenders and one of the top 3 reverse mortgage lenders in the country. And really, it's the only one that can truly, and I mean that true, like the truly piece, originate a forward and a reverse mortgage on the same platform.
Wow.
And that's part of what I wanted to kind of bring up, Bill, and like
Right.
you and I talking a little bit, is that challenge that we in the reverse space have with technology. We seem to lag a little bit on the technology side and the reverse side of the industry, whereas our forward brethren are constantly innovating, constantly adopting new ways and new technologies to help them not only do business, but to improve the consumer experience. So there's a lot I can share right now about just where we are as a reverse, kind of a reverse vertical and the growth that's in front of us.
Now, obviously, a lot of people watching this are with a company that has an LOS, so they may have direct input or say. Of course, you can change companies based on that. And I have in the past changed companies where you're locked into software that restricts your ability to do business. But let's talk more about theoretical. So Mortgage Cadence, how do you see the business opportunity of LOS software, and how do you feel like you guys address it uniquely compared to the competition?
Well, as far as how we see the business itself, just in general, holistically, having the LOS that works best for your organization is like having the right vehicle to get down the road. Sometimes you got to go buy a new car, right? The car that you've had, and I've had plenty of these cars, I've ridden them until the wheels come off, and they become old cars with new, more costly challenges. And oftentimes, mortgage technology becomes just that: old, a little bit outdated, legacy as it's known, software, and then it's starting to create more costly challenges to the origination path. So Mortgage Cadence kind of sees that as an opportunity to modernize the mortgage experience from a technology standpoint, and we've been happy to being able to do that as a company for, I think we're on our 26th year, gathering best practices and whatnot from our lender clients for 2+ decades, of course, modernizing ourselves along the way. So that's the kind of holistically how we see the LOS market. But specifically with reverse mortgages, the ability for an organization to have a forward mortgage and a reverse mortgage be originated on the platform can really bring quite a bit of efficiencies to an organization. And I think in today's market, Bill, where we're talking about higher interest rates than we're used to, tighter inventories than we're used to as far as real estate inventory, lenders are looking for ways to squeeze out more efficiencies, more margin, if you will, and therefore improve the consumer experience during this kind of market condition that we're in now. So the ability to, instead of having these disparate systems out there, but to bring it all into one place can bring you quite a bit of efficiency from a organization standpoint.
Now, I've actually been involved with technology for a long time. I actually, right out of college, worked in Boca Raton, Florida, where IBM was manufacturing PCs. I started on the hardware side, but because of hardware companies, we kind of got involved with the software. Yeah. And I was one of the first beta testers on the first CRM products that became big. It was it became ACT. Before it was ACT, was Context Software International.
Oh,
I was a
yeah.
beta tester on Microsoft Outlook, which was originally going to be a CRM. It kind of morphed into more of a email kind of platform. So I've been involved with it. One of the things I've noticed, and I've noticed it as an originator, because I was an originator for a good part of my career, as a real estate agent, is that it's most often people's complaints with software is not the software, it's their lack of understanding of the capabilities of the software. I would find, and I don't know the exact number, but if I was using a round number, most people don't even use 10% of the features of the software they're using.
Yeah.
And therefore, the goal becomes to help your staff, your team, your whatever, learn how to use the tools that are in front of them rather than compare it to other software that might be better. Doesn't matter if it's better if you don't use it. So talk a little bit about Mortgage Cadence. You must have a strategy or thoughts about how do you get, when you have an installation, how do you get the teams, whether it be the sales side or I know you're in sales for your company, but you must be thinking about both the sales side and the operation side. How do you get them to use the features that your engineers work so hard to get into your systems?
That is probably one of the largest challenges that we hear from Bill. Exactly what you're talking about is really user adoption, right? And full user adoption, to your point. Right. You're exactly right. We're in discussions right now with folks who are about to make the switch over to our platform, and it's interesting because they're looking to us to provide some, I would say, consulting or coaching along these areas, this line here. And one of the things that I have seen kind of repeated over and over again that blocks user adoption is overcomplicating the product itself. What you're putting in front of the user, to your point, only 10% is being used or so. Part of that reason is that there's just too much on the menu. Right. So the antidote to that is simplifying the tools so that really when somebody opens up their software on their computer, let's say, their eyes are only seeing what they in their role need to see, right? And it has you want to have, one of the things we talk to our clients about is having the ability to not configure yourself into a corner. So you want to have a very kind of a streamlined user experience where a user, an end user, by the way, can just walk through the steps, kind of procedural, really software kind of holding our hands a little bit through the process, educating us. Imagine that technology being able to just educate you. And the more you go down that path, the better you get at using the whole product. So simplification, simplifying the process, and making sure we're not turning on all the bells and whistles, turning on all the features all at once. Oftentimes, our recommendation is to implement or to present to their user base, to the operations and sales folks, in phases. Right. So that's one way. And that first phase is key in that those early adopters, if you will, can then turn around and train their colleagues. Right.
Because they get some small successes they can share. I did this, I did that, and this worked for me.
Not only that, but they can also provide early feedback saying, hey, that's still not right. That's still off. And that can go back to the internally or to Mortgage Cadence and say, hey, we need a couple more tweaks before we roll it out to the rest of the company. Because that user adoption issue is it's a real one. Right.
One of the challenges I find in a company like yours, I know you're a good-sized company, you're also backed by a really large company. And I don't mean to disparage it, but the challenge you face is that there's a saying, hungry dogs hunt best. When a company is a bootstrap, they're aggressive, they're going to serve the customer, but they may not have the resources to. On the flip side, if you have a lot of resources, sometimes there's a complacency that comes in. Oh, we already signed the contract with the company. We don't have to do a good job of this or as good as the competitor because of that. So how is a company, and you're in sales, so you must want to keep your team hungry and client focused. So talk a little bit about the challenge of keeping your team and clients and your client support departments hungry and servicing the customer even when you achieve some success.
It's a great point. That's a great point because that's true across all parts of life, right? You got to be hungry. You got to want it. You got to go out there and be scrappy and do it. So that's very true, Bill. I would say one thing from a market share perspective, Mortgage Cadence is not the largest. We're not anywhere near the largest. And so just from a market perspective, the total addressable market, we're constantly fighting for business. in that space, right? We're constantly reaching out and connecting with as many folks as possible and whatnot. But then, to your point, once they become clients, holding on to a client, it's like holding on to your breath. Like they're the oxygen that you have. Now, I think every company out there can say something like that, but then when the rubber meets the road, are things like, for example, I'll give you from our side, our executives traveling the country and visiting our clients, literally, and not just on using technology over the internet. Sure, those are there, but part of our governance with our cadence with our clients is trying to meet them where they are, either on a webinar or literally where they are, and that means being knee to knee at their desk or their conference room if needed, right? Just to kind of keep your finger on the pulse, and keep that relationship going. I think that's going to be key for anybody in any kind of sales related anything.
Sure.
Is to have that sort of face-to-face time. I mean, you were just at a conference. I'm at conferences all the time. There's some things that you can do face-to-face that just kind of are lacking when there's a virtual connection. And I think those things are just going to be very important for retaining clients, but retaining happy clients. And I think the story is that a happy client talks about you, and an unhappy client yells about you. We want people to talk about us and go, you know what? You should talk to so-and-so, instead of like nobody even inquiring and saying, these guys stink. They're nowhere, and that happens. So I think we want people talking about us in the most positive way. That's one way to do it.
One of the unique challenges you have that I think also sales managers at reverse mortgage companies probably have more than originators is there's a concept in software called eating your own dog food. And famously it goes back to Apple when they discovered that all of their engineers and all of their salespeople were using Windows products for their computers, and they're trying to sell Apple software. And at one point they said, no more Windows products. Everything has to be Apple. If we don't have the right tool, we'll make the right tool. And that kind of forced them to get on board. And I had an experience like that when I was a manager at Century 21 for a franchisor where people said, well, the software is terrible. And I looked at it and said, no, it's maybe slightly below average, but we weren't using it at all. We weren't implementing it as a management team at all. And I said, from now on, we need to do everything we can to use the software to show our salespeople what can be done with it, not focus on what can't be done. Obviously, every software is limited. There's always trade-offs, but can be done. So let's talk about, when you have a software, you're rolling it out to the operations staff and you're rolling it out for the originators, I guess, to use, but the sales managers aren't originating loans most commonly. Some do, but the executives aren't, for example. How do you make sure the company is actually supporting the implementation, not just saying, like you said, go ahead and use the software, but what can they do to actually use the software to help be more effective?
I think it depends on the organization, because I've recently worked with an organization who's pretty hands-off from the executive team level, and that thing happens. From the executive level, they're not that aware of what's going on.
Right.
The C-suite oftentimes they're managing a whole other thing, including this piece. But I think the other, then I think about that subset, and then there's another group of people where for example, I think about a branch manager or a regional divisional kind of a head that not only runs teams, but he himself originates.
Right. That's going to be the effective one. Give me that guy.
Yeah, that person, that man or woman in that seat doing that job, continuing to get their hands dirty, is really leadership. In everything, not just user adoption for the software, but throughout their business, right? They're the ones in charge of that P&L as well, right? So they know that there's a technology cost associated with having that technology. Therefore, they're highly invested in making sure that the technology is fully used. So I think it just depends on the organization, but my favorite is when somebody who's in a position of influence, if you will, actually gets their hands dirty, actually gets in there, actually tries it out, is part of the upfront solutions gathering meetings to provide input enough so that he or she realizes, hey, I made this happen. I helped create what we have. If we can get that buy-in up front of the installation process, that goes a long ways, and that goes a long ways for the frontline people, loan officers, processors, underwriters, et cetera, et cetera, et cetera.
You and I talked before, and I think we share. I think I shared with you two of my theses for this podcast. One being there should be 10 times as much reverse mortgage activity as there is right now, but for the bad reputation and the lack of education, both at the consumer level, the referring sources, wealth managers, real estate agents don't. I can tell my story again. I tell almost every episode I talk about my stories, how I didn't realize there was an H4P program. So obviously, you're not uniquely solving that problem. You're trying to solve that problem in a unique way. But what do you see as one or two of the main activities or changes in the sales of reverse mortgages that kind of drive the direction of mortgage cadence? Meaning, what are kind of the one or two big activities and or problems that you look to address?
I think, speaking from a technology standpoint, I think we alluded to it early, Bill, is that in the reverse space, we're not adopting technology at the same pace and rate as our forward mortgage brethren are. They're constantly innovating, and they're adopting new technologies, modern technologies to, one, streamline their operations, right, from a corporate and business standpoint, but also to improve the user experience, right, borrowers, how they interface. On the reverse side, we're a little bit slower than the forward folks. One of the challenges is that the technologies don't speak to each other. Reverse technology and forward technology don't speak well until now. I'm the chair of MBA's MISMO Reverse Mortgage Work Group, and it's a group of people from all over the country who are from reverse mortgage companies and some forward mortgage companies who've gotten together over the last year and a half or so, 2 years probably, and have been working to update the forward mortgage dictionary, if you will. That's what MISMO is. It's the standards organization for the mortgage world. And there's a dictionary, if you will, a data set. And reverse has been sparsely kind of in there. And therefore, if anybody who wants to do reverse mortgages that's coming from the forward world wants to do it, there's a big technological hurdle to overcome.
Interesting.
It will be announced in the next 5 to 10 days. You're hearing this here today first, Bill, but for the first time ever, the MISMO standard that is used by all lenders will now have included a fully baked reverse mortgage data sets inside of the dictionary of the forward mortgage world.
Wow.
And that's coming out in that'll be announced, like I said, in about 5 or 10 business days. And some of the details that go along with that. Why is that important? Bill, the reason it's important is because if somebody wants to originate a reverse mortgage, now that you have all of the technological pieces fitting together, there's now a bridge between the forward world and the reverse world that now lets us communicate.
Right.
So data going back and forth.
The language is different, right? Because if you don't have a common set of dictionary, then you have different languages, and software can't speak without mapping and customized third-party softwares that break and they never really work right and they crash. And whose fault is it? It's your fault. This is getting very technical, but I really appreciate this. I'll give you a small example of this. I'm a real estate broker in Beverly Hills, California. Yeah. Our MLS, which is themls.com, and one of the first MLSs, one of the largest, but one of the largest, has in its MLS data set for probate, yes or no, probate court confirmed required, yes or no. And you might say, well, what's the big deal? I don't know if any other MLS even has those data sets. They have in their remarks probate or their keywords probate. Now, you understand this as a technologist. Yeah. So when I was telling other agents in other places, well, just do a search for all of the probate listings or all the closings or see who the agents were. And they would look at me and I think, what do you mean you don't have that? Well, because in my data set for my MLS, we had it, and the MLSs share data, but that data set's left out, so that data can't be automated or shared. And what you're saying is this now creates a common language so that all not just you, but all the companies that do mortgage origination
right.
have the chance now to include the data set that would support reverse, and that now creates that's like one of the first critical phases for technological improvement, I think, as an industry.
Well, and also advancement. I mean, one of the challenges in the reverse space is that we have most of the volume of the funded reverse mortgage loans are tied up with about 3, maybe 4 companies in the U.S. And maybe 55 to 60% of all the volume is all bunched up with,
right.
And then there's 80 or 90 other companies across the country who are originating as well, sharing the rest of that percentage, and that becomes a vulnerability for the industry. There's not enough. My point is there's no distribution, not large enough distribution. Having a bridge to the forward world where we now don't speak different languages, but we have the same language, suddenly opens up the possibility, Bill, of having anybody in any part of the mortgage industry. All the distribution in the world is on the forward side. They're the largest segment, right? The reverse space is tiny compared to the forward space.
Right.
But now there's a way for that gap to be bridged and distribution to be expanded. And that's part of what Narmala, their mission, as they're kind of beginning to roll out initiative, is to start looking at ways to get the word out, not only get the word out to forward mortgage folks, but find ways to embrace and bring in anybody doing forward mortgages who wants to do a reverse can now, can get into it. Especially one of the hurdles now that's being fixed is the technology piece. Right. So their organizations can then buy in or invest in the reverse mortgage direction if they so choose. So,
and whether important. Or not, yeah, no doubt. I mean, again, we're getting a little technical. I appreciate because I come from a technology and engineering background, but I think what creates the possibilities for companies to effectively, and whether they have their originators specialized, you can or can't do both, or can do both. Yeah. If you can't do both, a referral, it's all in the same system. They can track it, they can compensate, they can watch the deals, they can also grow into it, meaning they can originally say, no, you can't do a deal, but once a guy does 1 or 2, hey, you did 1 or 2, here's a training program, here's a free coupon to go to Narmala training to get some extra help or whatever it may be. So it creates those possibilities when it's in the software system. I think that's really a big milestone, I think, in the industry. Well, thanks for sharing it here uniquely here on the Reverse Mortgage Podcast. We scooped Heckam World. I think I'm going to.
Yeah, I think you did. I think you got a little extra news there. But it's good. It's a good piece of news. I'm glad to share it with you and everybody else out there.
So you're the sales manager, and so you have a sales team underneath you. Are you able to share how many salespeople you have? And
we've got. Let me do a count here. We probably got. I'm going to just say about 5 people that we're working with.
Okay. And so talk a little bit, let's put your sales manager hat for a little bit, and imagine that some of the people in this call are originators, that we all need more help, we all need an extra coach. What do you think are, and I assume the same practices for your sales team are the same things that struggle for the reverse mortgage originator or me as a real estate broker in Los Angeles. So share with us what you see as the 1 or 2 best practices of the ones who are really of the top guy in your group, or the top ones consistently. What are 1 or 2 of the consistent things you see that differentiate them from the ones that don't do as well?
I'm going to take not only from my current experience, but just kind of previous experiences in other organizations and whatnot as well too, and kind of draw from all of that. There's nothing like a personal connection with somebody that you're trying to sell something to. And you said something earlier, eating your own dog food. If I have a hard time selling something, Bill, that I don't really use or believe.
Right.
So if you're out there and you're selling mortgages, I mean, if you have a mortgage or you have a family member who has a mortgage, it might be kind of interesting to, at dinner one night or in the backyard doing a barbecue, whatever, or whatever you're doing, to, just talk about like, hey, what do you guys think about how mortgages get done? Because everybody's gone through processes of getting a mortgage, and some of us are like, why is this taking so long? And why do I have to keep signing the same document over and over? And wait a minute, they've already asked they already asked me like 3 times for the same W-2 or bank statement and so on. So I think there's a common experience, Bill, for anybody who's has family members or they themselves have a mortgage. that if you can get in touch with those experiences yourself, and as you're talking to another human being, whether on the phone or in person, you can really kind of personalize the interaction with them
Right.
and let them know. I hate it too when we have to get 2 or 3 documents that you already provided. We're going to try to avoid that. Right. I've been through that myself. Like having that personal connection with somebody, I think has been key to some successful people that I've been around with. And then on the opposite side of that, it's kind of a application slinging. There's people just slinging applications, every mortgage applications,
Right.
hoping 1 or 2 land. That's a different approach that I haven't seen be as successful as the some personal connection with people. Now, there's also a numbers game there, Bill. You probably can sling more applications than you can have authentic, real conversations with, just from a time and bandwidth perspective. But I'll tell you, those transactions where you have a personal connection with, when there is a bump in the road, you do have some rapport already built in.
Correct.
You do have some trust. You do
Correct.
have the confidence that that you're going to handle that bump, that you're going to fix it. And oftentimes you can probably fix it before them even being exposed to it or being bothered by it. So because you have that connection, right? You want to make it right. So it just makes a difference for salespeople if you take an approach where you can actually make a real connection with real people.
Yeah, the book of business for my business is almost all referral, is different than a real estate agent who's buying Zillow ads, where every customer is going to compare you to 5 different people, and the second they see something wrong, they're going to tell you you're wrong because they're on Zillow and they know everything about real estate. And I've only been doing this for 38 years, but okay, you know more than me. Versus people who know, like, and trust me and come to me for counsel and help and education. And that's why I think in the course of reverse mortgages, while there's nothing wrong with buying leads and doing online marketing as a supplement, I just don't think you can build a business and sustain it that way. You can maybe add that to a successful business to grow it, but the beginning has to be you going out and having relations with somebody who's referring you business, who trusts you, likes you, believes in you, is willing to overlook your problems, may even know you've never done one or two, but willing to work with you. I know as a realtor, when I moved from strictly residential to adding commercial and non-residential business, my first customer, I said to him, well, haven't really done commercial business before. And he said to me, Bill, I know you. You're a smart guy. You'll figure it out. If you need help, you'll find somebody, but I want you to handle it for me because I don't know any other commercial realtor that I trust like I trust you. Well, once you have that currency, then you can spend it on getting help or maybe sharing a deal. Same with reverses. I always tell people, I don't care if your company lets you get paid from or not, do a couple, and either you'll develop and if you learn, you'll be able to do them, or some of the company will hire you to do them, but you got to learn how to service your customer, and that relationship is really important.
Very important. Yeah. There's that old adage, Bill, that the 80-20 rule, that 20% of the salespeople are generating 80% of the business. And oftentimes that's because only a few people, 2 out of 10 in that math, are actually willing to take. What was your at Normala? You said it so well, where you said go the extra mile for your clients.
Right. Yeah, I think that's for me. That's the ultimate business development tool, is taking care of your customer, because you need to take care of them anyhow. We get paid having happy, but if you do an extra 10% to make them extra happy, they give referrals, they go back to your referral source, say good things. What have you done for business development? Well, you just took care of your customer. And by the way, you get paid to do that. Like, it's not, and I just feel like if there's one thing that's changed in our business culture in my career that I've seen, is the almost entitlement that business people have for business. When I started out, people were so appreciative. They're so, I think, much focused on service. And I just don't hear that language today. I don't want to sound like the old angry man on his front porch yelling at the young people. The opposite. I'm encouraging young people, hey, listen, this is how we get paid. This is what business is about. And by the way, if your business is based on just numbers and algorithms and advertisements, you're competing with Zillow, Facebook, Google for your paycheck. You're going to lose. These companies have trillions of dollars. Versus they can't compete with people that know, like, and trust you if you do your job properly. And that's the distinction.
Yeah. And one thing we have to remember in the mortgage space and real estate space is that mortgage and real estate, that is likely that person or that family's largest transactions of their life.
Yeah.
It's like buying 100 cars. It's huge.
Right.
You got to have some trust. If you're going to make that, you're going to sign on the dotted line. You got to be able to work with somebody you can trust and you like, and right? So it's pretty important. Let's not forget how big of a deal it is. Housing stability, a home, a roof over your head. It's a big deal for families from, all various kinds of come froms,
Right.
in history. So it's a big deal. So yeah, making sure we're doing right by them is really important. Absolutely.
So, I almost feel sorry for people who don't work in real estate, because I feel like, when I go somewhere, people, want to know about, who doesn't want to know about more about real estate. So, now does your software deal with servicing as well, or just the origination side?
It's no servicing. So it deals from the borrower facing portal, the point of sale, all the origination piece, all the closing, funding, the whole thing. Servicing, most of our clients export the data and then send it over to their servicer.
So my magic wand, if I had magic pixie dust, could change the industry. In the course of doing this podcast, a couple of things I learned. One is about the annual statement or the annual certification the customer has to do to certify they're still eligible for the reverse mortgage, right? It's still your primary residence.
I have a story.
I'm sorry?
I have a story about that exact thing.
Okay, well, when I found that out, I said to myself, as real estate agents, we're supposed to call our customers every 90 days or so. But here you have built in, they technically can't keep the loan. I don't know what happens if they don't fill it out. Do they really get foreclosed on? I don't know about that. Okay, but the fact that they're told they have to do this once a year gives you complete permission to call them once a year and say, hey, will you get this done? And I know when I talked to originators originally, like, well, that sounds like a lot of work. How could that be a lot of work? They paid you a year ago. Why are they not your best friends? And by the way, they're going to die. They have kids. Their kids either need forward mortgages or are going to take over that mortgage or whatever. How could you not want to make that phone call that they have to talk to the lender or the servicer or somebody, and maybe you sold the servicing. You still can service them by helping them with the form. You can answer the question. You can participate. Tell me your story about that. But for me, the magic pixie dust would be as a loan officer that somehow your commission is tied in to that phone call every year. If you don't get paid. Okay, I'm sorry. I'm off.
No, that's good. I like it. Okay, let me tell you the story. So a little background. So my parents got a reverse mortgage, and they have since both passed away, right? So I've gotten to experience, and I used to be a reverse mortgage loan officer as well, right? So I got in the industry in 2012, and so I've been from like educating consumers to then coaching loan officers in the reverse mortgage space to VP of reverse lending at another organization to now being on the technology side. I've gotten to see the reverse mortgage, the lifespan of a family from before having a reverse mortgage, having it, seeing what it's like to live with it, them passing away, and then as an heir, one of three heirs, what it was like for me and us as heirs, that whole piece. It's a very unique view into the opportunity of a reverse mortgage. But let me tell you the story about the annual certification letter that comes from HUD FHA. So my mom had already passed away, and it was just my dad. And he got a letter bill. He didn't know what it was about. He was starting to not pay attention to a lot of things, and just threw it away. And I think another month went by, threw it away. Another month went by, threw it away. 4 or 5 months, threw it away. Next thing I know, somebody knocks on his door. And it's an appraiser doing a drive-by, sort of just drive by, take a few pictures of the house, because it's the lender's way, the servicer's way of checking, one, did the house burn down, or did they disappear, or what's going on, right? Now, there's no like FHA or HUD police. They're not knocking on your door checking to see if you still live there. In this case, my dad just wasn't responding. So he calls me and he says, hey, there's some guy here, blah, blah, blah. I get the guy on the phone. And I talked to him, and it turns out that the servicer had sent him to just do a drive-by appraisal. He thought he actually went a little further than he needed to by knocking on the door. But then I got on the phone with the servicer and my dad. We did a 3-way call, and they did the certification right over the phone.
Glad to do it. Yeah.
They were happy that you're well, you're fine, good. I mean, it took like 5 minutes or less, and they were done. It was quick. So it wasn't a big deal, but not responding to it, right? I mean, obviously caused them to like send somebody out to do, because they were thinking, gosh, maybe they passed away, or something's happened, maybe the home will go into a foreclosure or something. They were just trying to figure out what was next, right? So it's interesting, that part of having parents have a reverse mortgage and then they pass away and then you inherit the home. It was in a trust.
Okay.
So it was arranged in a way that we could then manage the property right after that.
But still, you have to do something with it, or you still have to do something with it, right? It's still, it's not magic.
No. You still have to, as the estate or the heirs, we had to figure out, hey, one, do we want to keep it? Do one of us want to live here? And for us, the answer was no. The other question was like, well, if we don't want to live here, then what do we want to do? Do we want to hold on to it and maybe rent it out, or sell it? After several months of trying to figure out what we want to do, the three brothers, we ended up selling it. And then that's it. And that's really how you kind of finalize the terms of the reverse mortgage. Now, there's a beautiful piece of that, the non-recourse features of the reverse mortgage that are really there to protect the homeowners, the reverse mortgage borrowers, and the heirs. Afterwards, we experienced it, right? Because if I had a regular forward mortgage bill and my parents died, if they had a regular forward mortgage and my parents died, about 30 days later, they're going to get a letter saying, hey, you're late on your mortgage payment. Another 30 days after that, they're going to get saying, hey, you've been late now 60 days. This is getting serious. 30 days more after that, you're getting to 90 days. They're probably going to start talking about foreclosure or some sort of going to get sold on the steps of the notice of defaults and all kinds of things that start happening. Whereas with a reverse mortgage, there's built-in time for the heirs, for the estates, to be able to manage that house, that estate, right? And there's no mortgage payments anyway, so there's no lates, there's no letters, there's no calls, there's none of that, right? What we did were made sure we stayed in touch with the servicing company, let them know, hey, mom and dad are now both gone, and we're in the middle of, we had to fix the roof bill, we had to fix a bunch of stuff, and also decide what we were going to do with the property. And just staying in touch with the servicer was all that we needed to do. So my brother Frank is the, what do you call it? The estate, the executor of the estate. So he was just emailing them saying, yep, here's what we got going on. They called. When we listed it on the MLS, they wanted a copy of the MLS printout, and sent that over to them so they saw it, and then it was fine. So there was no pressure as an estate to have to rush or fix a payment problem or this, that, or the other, right? So it was that non-recourse feature of the reverse mortgages is beneficial for the homeowners when they're alive and well, and after they have passed, for the estate as well. It's a beautiful part.
So imagine being an originator. I talk to them all the time, and I just want to kill them. I really do. Sorry if you're watching this, you're offended, but I mean, come on, let's raise our standards here. So, for example, I'll say to them, well, you should call them all. If it's a 1-year thing, you should be calling them in 11 months. You're going to get this thing. When you get it, call me. Here's a link. Go right in my calendar, and I'll walk you through if you have any questions at all. Why would I do that? It's so much time. I say to myself, I ask them, well, how many reverses have you done in your entire career? Now, 95% have not done 10 or 20 or 50. Certainly not 200. I said, but even if you did 200, that's one per workday, 5 days a week, 40 weeks a year. It's not that much, one a day to talk to a past customer. And by the way, you can ask them, hey, I noticed when we did your loan, you didn't have a trust in. Have you guys considered it? Have you thought about the advantage of getting an estate plan done now? How about health directives? How's your wife doing? How's she feeling? Might you want to get that done now? Is your insurance up to date? That's another one. Oh, I see you got a trust and you transfer the property interest, but it's not insured, so let's just be aware of that. But do you also transfer your insurance as a additional insured? You put the trust on. There's a lot of things we can talk about to create value for our customers. So they say, if anything ever happens with this house, you're my first phone call. And I'm only saying this because I was an originator. I started my career in '86, and I got out in 2008 when the mortgage industry kind of fell apart. I thought I can control my destiny better as a salesperson in real estate than as a mortgage person. And I did some mortgages. And I did 2 reverses. One of them, they both passed, and the family called me to sell the house because, of course, it was natural that they trusted me. I took care of them.
Yeah.
Why would you not stay in touch with the
Yeah.
people you write the mortgage for the rest of their life? Tell me I'm wrong here, or tell the originators they need to do that every year.
Yeah, I think about my brother Frank. He's been in the real estate mortgage industry forever and ever and ever. And people like your story, Bill. They trust him. They call him. Property values have continued to go up. They're ready for a refinance. They think of my brother Frank,
Right.
right?
Of course. Of course.
Why? But why? My brother Frank has a memory, first of all, incredible memory and good notes. Because when he does follow up, he's asking about their spouse, talking about their children. The last time they talked, that kid had graduated and is now going to college. How's that going? What are you hearing from? Like, just having, again, going back to that personal way of being with people, but that follow-up is, when they see my brother Frank's name on the phone, there's a warm feeling about it, right? Sometimes you see somebody's name on the phone and you're like, I don't want to talk to them right now, Bill. I don't want to pick up this call, right? So I think following up is amazing. If you don't follow up, somebody's going to call them, and that relationship will slowly start to fade away. And listen, with reverse mortgages specifically, there's you could do a refinance, right? You can refinance a reverse mortgage into a reverse mortgage. It's called a HECM to HECM refinance.
That's a heck of a loan, by the way.
Yeah, oh, it's fantastic. I mean, it's another way to access equity. Or let's say the homeowners were single and now they got married, you can add them to title that way. All kinds of possibilities around that. So yeah, absolutely following up and staying in touch with people. These are the people, not only they gave you the business, but they gave you the trust for one of their largest, and in the reverse mortgage case, probably the largest and last financial transactions of their life of that size. Right. It's a heck of a deal. It's a heck of a responsibility that I think is even more amplified with a reverse mortgage.
Yeah, and I think if there's one thing that I would love to inspire mortgage originators is make that part of the process for yourself, to be involved in that annual certification, and even those that don't require it, calling them once a year. We as professionals have a chance to pull up title reports to see if they transfer title into a trust. Yeah. If they haven't, every year you should be calling and asking them that, because part of it is serving your customer. And if you refer them to attorneys, eventually those attorneys go, what a great originator. You're the person I should be including in conversations when people need mortgages or need reverse mortgages or need to sell a house. Who do you know is a good realtor that you can refer us to? So that's why I got into this whole podcast to begin with, is to change it from, I don't want to see this business turned over. No offense to the companies advertise on television, but come on, really? You're going to call some call center because some actor tells you how good it is? They're charging way more than originators do. We need to up our game and be willing to reach out to our customers, engage with them, and be of value to them, compete with the Facebooks and the Google ad services. And so, George, I know I'm speaking to the choir on this one, though in your case, you're more focused to serving those people. So I guess just kind of a last question, because I'm a little bit running out of time with you. I really appreciate your time today.
No problem.
So, I know where I see where the reverse mortgage market should be heading, and I'm kind of determined to do my piece to make that happen. Where do you see the real estate market this year as it relates to reverse mortgage originators? Do you see the clouds? Do you see improvement? More of the same? Where do you guys must have some sort of a budgetary understanding of where things are. How do you see the real estate market? And then what do you think originators need to do to take advantage of the market as it is?
Well, I think from a reverse mortgage, that's part of the mortgage industry. The reverse mortgage industry has mostly been playing defense for a while. We've been countering bad press. We've been encountering all kinds of stuff going on there. And all of that has been addressed. And so I think for the first time in a very long time that I remember, I think it's time to play offense again and turn the ball around and start moving forward. What I mean by that is invest in areas that help you realize that mortgage lending is from cradle to death. Right? Yeah. We have a ton of solutions for people who are, 20s, 30s, 40s, 50s, with tons of mortgage products and opportunities. After you're 55, 60, 70, that age group is extremely underserved. It's underserved. One of the options, not the only one, is a reverse mortgage. And I think we're going to probably see a small, modest amount of growth in the remainder of 25 and 26. I think coming 27, and I know it's getting far, that feels like a long ways out there, but you got to start now. I think you start going to start seeing a lot more happening with home equity as a resource to help homeowners, American homeowners, really figure out the retirement crisis that the country is in. Right? Savings rates in America are declining. Indebtedness is increasing, and I'm talking about by a lot.
Yeah.
And the one thing that most homeowners are sitting on is a ton of equity, Bill. A ton of equity. I call that lazy equity. It's not really doing anything for you, sitting around doing nothing, right? The walls of this house can't pay a bill. So if you tap into some of that equity, not all of it, some of it, right? It can help you kind of have that nest egg, help you have a safety net should something happen. And I think those are the conversations on consumers' minds. So if you're an originator and you're wanting to broaden or expand your base of consumers, consider people who are purchasing homes and have homes already who want to refinance that are 55 years and older. There's products for homeowners, reverse mortgage products that are for homeowners that are 55 years and older. And then the federal FHA one is 62 and older. So there's a couple of opportunities for people to kind of grow their business, but also like help a lot of people. This is one of the most satisfying interactions in the mortgage industry that I've ever experienced, is helping a whole family, not just the older homeowners, but a whole family think about, okay, what are the next 10, 15, 20 years going to look like in light of the mortgage, the house? What happens when my spouse passes away? What's that financial situation look like? So it's really a consultative approach. You're not just selling something. You're trying to help a family. So there's a lot of opportunity, Bill. I think we're going to see a lot of growth. We're going to have to wait out 25, but I think 26, you're going to start seeing it, and 27 for sure. I'm just looking at macroeconomic conditions here, Bill. You know, it's slow moving at times, but I think we're headed in the right direction. I don't see cloudy skies. I see a break in the clouds.
Well, and that's industry-wide, and I think the thing I always tell individual originators is you have an unlimited, upside, and particularly with reverse mortgages, it's so underserviced that you really have a fantastic opportunity. Well, look, I appreciate you sharing kind of your perspective with us on technology in general and the business. For anybody who wants to know more about Mortgage Cadence, George Morales is the National Sales Manager at Mortgage Cadence, which is a software for loan origination, both forward and reverse, but uniquely for both. And you can get the website is mortgagecadence.com, and you can go in there if you're so inclined to get a demonstration and such. But more importantly, I think he's definitely a thought leader to pay attention to, and worth to. I really appreciate your insights with us today. So, George, thank you so much for being here, and look forward to seeing you again soon.
Take care. Thanks, Bill.
And for the rest of us, this is the Reverse Mortgage Podcast. We do this every week. We interview top originators, management in the field, as well as thought leaders. And I think today's example, I think we really got a lot of good insight in terms of how to run our business, as well as the industry in general. Come on to the Facebook group if you have questions, referrals, and the episodes are all posted there as well. The Reverse Mortgage Podcast group is the group in Facebook. I'm Bill Gross at Bill Gross Probate. If I can help at all, please reach out. If you like this, please like it. If you have suggestions for topics or for somebody to interview, put that in there as well. Love to get your information. If I can help at all, please reach out. As always, make today your best day ever.